Okay, it worked. So I disagree with Janie. If you have questions on Friday, she's gone Tuesday as well, so just hold them till Wednesday, please. And then she'll get back to you now. Before I start today, the first thing I wanted to tell everyone to do is to give everyone, either to the right, to the left, or both people, give yourselves a high five. Right now, everyone gets a high five. Because if there's no one next to you, high five yourself. Because this is the first group of auditors that we've had in the state of Indiana who has submitted and completed their abstracts via Gateway. You're the first group to do it. Give yourself a standing ovation because you guys are the ones that deserve it. I know there were frustrations, happiness, everything kind of in between. I got the emails, but we did get through it. And as we know going forward, we're going to be continuing to update, improve the process the best we can. This year, make things even look better. Should have been the most difficult year you're going to have because going forward, we're going to just do everything we can to make it better. I do think the system's going to be great because it does increase the availability of that information, not just between other governments, but also to all of our taxpayers throughout the state of Indiana. So with that little public service announcement, I'll go ahead and move on with everything I'm here to talk about. I don't have funny jokes like Janie, which I really wish I did now. I just had my little feel-good story. As you guys, everyone here should know, because Janie just told you, we're really a two-person team. It's Janie and myself. We're the local government division. We also have Courtney Ever and Matt Beck, who are kind of our supervisors and bosses, and then, of course, Tara. But as far from the day-to-day operation, it's usually us two that you guys will need. If you have any questions whatsoever, we're always the best two people to get a hold of. Even if it's something that totally out of left field, has nothing to do with settlement, don't know who to talk to from the state, you just know you need to talk to someone, give us a call. We may not know your answer right then and there, but we'll do whatever we can to speak to everybody to get your information out there, or to get your answer. Can everybody hear me? I just want to make sure I'm talking into the mic. It kind of feels like I'm not. Okay, good. One thing I've never been accused for is being too quiet. I always like to start all presentations with just a little thing about me section, kind of hit on my background. Been with the Auditor of State's office for almost 2 years now, which is hard to believe. So most people here have probably seen this or heard my background story, but I know there's 20-some new auditors here who haven't had a chance to meet me yet. But I'm a Ball State University alumni. I was class of 2008. Graduated from Ball State with a degree, a double major in accounting and information technology, information systems with concentrations in networking and network security, which that degree is from 2008. I have not kept up with it, so it's totally worthless today. Technology has completely changed. But since college, I've only been employed in 2 separate places. I was with London Witty Group, who is now LWG CPAs and Advisors, from 2008 up to 2017. There I did a little bit of everything. I'm a CPA, so I did first couple years did tax returns. I did a lot of financial statement audits where I went to all over the state of Indiana. Really went to southern Indiana for the first time. I'm a northerner from South Bend, but I learned there's more than just driving through on 65. The hills and everything are beautiful. But we audited rural electric companies and smaller gas companies. Then after doing that till about 2011-ish, one of the partners of the firm asked me if I would want to focus in doing government work, which kind of what leads me to here today. At the time, I was like, hey, a partner's asked me to do it, why not? That's when I got into financial advisory work. I started doing a lot of debt bond work, a lot of economic development work, so started using that 3-letter word called TIF. I hate to say that in this room. I usually try to hide. And I did that type of work till 2017. The last couple years I was there, I was a manager with the firm. And then in 2017, I decided to kind of move to out of the consulting field and move to the state and start doing some public service, which leads me to here today. So a few key notes of what we're going to discuss today is the first thing I really want to talk about, because I think this is kind of the biggest topic going on right now, is I want to take a lot of this time today to talk about the circuit breaker adjusted rates. there's a few changes in how that's being done this year and how that's being entered into your system. So I really want to take some time to talk about that. I'm going to do my best to really talk about why we have these and how they're calculated as far as from a high level. Not going to get into the algebra that goes in. It's a 10-step equation that I'll save for another day. We could do a whole class on that. But then once we go through all of that, I'd like to just talk about an overview of settlement, since there are 20-some new auditors here. I just want to do a quick overview of the different forms and just kind of how the process works. There's no major changes from last year, so that makes that part a little bit easier. Then I'll do my best so we can still try to get out of here on time. I really don't want to cut it into your break time. Figure that's when I'll start having the dead vegetables and fruit being thrown at me to get off stage. So, all right. With all that being said, let's talk about the fun stuff. The first thing that I want to talk about is just circuit breaker adjusted rates and what are they. The first thing that I want to try to just make to get across is, why do they exist? Why do you even have to use circuit breaker adjusted rates when you already have your certified property tax rates? Because logic would first say you have property taxes. When you distribute them, you should distribute in the same manner that they're taxed, which would be your certified property tax rates. The one thing that logic or that thought doesn't really take into place is that impact of that little thing called circuit breaker loss, which is something I never really even thought about before I came to the state. What happens is you have two I like to lump them into three different classes of funds. You have your non-protected funds, protected funds, and exempt funds. Your non-protected funds, meaning they are not protected by any circuit breaker loss. If those units or that taxing district have circuit breaker loss, they are going to absorb their portion of that loss. Your protected funds, however, they are not going to absorb circuit breaker loss unless they're the last resort. So let's say you have 4 different funds. Your first 3 funds, your general fund, your CCD fund, and whatever fund, those 3 funds are going to absorb that circuit breaker loss first, and then once the circuit breaker loss is absorbed in those 3 funds, any remaining loss will then be allocated to your debt service fund. Finally, you have your exempt funds, which are not are outside the circuit breakers, so they cannot absorb any loss. So I totally went off topic there a little bit, but I kind of are. So this next slide was kind of my definition of the protected funds. I kind of just already talked about this, but usually they are going to be your debt service funds. That's kind of the best example of your protected funds. The one key note I want to point out is that when we speak of protected funds, your total tax rate for the taxing unit or the taxing district will not change. So if you have those 4 funds, the allocation of that the allocation of the circuit breaker loss can be allocated to the other funds, and that is done by adjusting the tax rate up or down. But at the end of the day, the sum of that total rate is still going to equal to what it was prior. So the taxing rate for the taxing unit and taxing district will not change. Adjustment within the funds, but that rate will still hold the same. Your exempt funds, on the other hand, are not susceptible to circuit breaker loss. These are usually your referendum funds. There's a couple other examples, at least for the next, I believe, 2020 in St. Joe and Lake counties, where there's certain debt funds that are exempt. But overall, it's usually your referendum funds. Unlike the protected funds, these funds, no matter what, cannot absorb any loss. So what ends up happening is, if you have a taxing unit with circuit breaker loss, we increase their tax rate in order for them to have an increased proportionate share of the funds. And I have a few slides here coming up to kind of try to do easy examples to talk about what do I mean when I say we increase the rate to absorb a higher portion of the funds. Kind of like Janie said too, I have all these notes written down, and I get so into talking, I stop looking at my notes. Okay. So first here, I have my first example. So the first example that I want to try to look at is an example of a simple taxing district with only a protected fund. And if you'll see in my example here, I'm not breaking it. Does the mouse? No, it doesn't. I just broke it out by different taxing units. I didn't break it out by the different funds. I'm trying to keep this as simple as possible. The other thing that I did, you'll notice, if you look at the certified rates for each of these units, I used the same rate. So you'll see each fund or each unit has the same proportional share of the certified tax rates. Everyone has a 20% share. The one thing that I did make a little different is if you look on the school, on the fund type, there's two kind of funds for the school. I have a non-protected fund and a protected fund. And each one of those get a quarter or 0.25 or have a lesser share of the proportionate funds. The other portion of the example I want to point out, so I have gross levy, or we can call that gross collections, of $500,000. Then we have a $20,000 circuit breaker loss that needs to be absorbed by this taxing district and all the separate units. So once those we reduce the gross amount for the circuit breaker loss, you have a total collection that's going to happen of about $480,000. So once we get to distribution, so with all the tax bills go out, we're expecting this $480,000 to come in. This is gonna be a perfect world, and everything comes in as planned, and you have $480,000 of collections. So what happens now when we want to go distribute the funds? So the first thing that we know when you look at the county, township, library, and city, we already decided in this before that they're going to get 20% of the funds. So in both scenarios, you'll see that their adjusted rates do not change, and they receive $96,000, and the $20,000 is allocated them by 20%. So the total share of the funds is going to be a $4,000 circuit breaker loss and $96,000 share of the funds. Where an adjustment occurs is at the school level. So if you look at the school, we're showing two funds. You have your non-protected fund and your protected fund. Here's where the circuit breaker adjustment happens, where you have the 0.02 decrease and the 0.02 increase of the certified rate in order to make the distribution occur. Like I said before, there's a whole line of algebra that goes in for the, I'm not going to go into that. Just assume we talked about it in the math, and that's what the math came out to. So once you do the math, you see that the rate gets adjusted to a 0.27 and 0.23 for the purpose of distributing the funds. And what you'll see, what happens is now for the distribution of the funds, the protected school levy for the school, that protected fund is going to receive $52,000, and what that $52,000 is 20%, or their percentage share of that original $5,000. The circuit breaker loss, or that $2,000 that you would have seen if we didn't adjust a rate, that $2,000 is absorbed by the non-protected funds of the school. That's why the funds were reduced by 0.02. So you're seeing the school share being $44,000, the non-protected share being $44,000, the protected share being $52,000. If you combine the total, the school's total share of the funds is still the same $96,000 it always was. We're just adjusting where that circuit breaker loss is going to go. So protected fund means the fund is just protected by circuit breaker loss, so the unit's still going to absorb the same share. Next, we have the exempt fund, where the fund is fully exempt from the circuit breaker loss. So the circuit breaker loss just cannot be allocated to that fund. So here I'm going to take the same example, however, we're making one change or adjustment to that example. Instead of having that last fund be protected by circuit breaker, it's now going to be exempt. So you'll see prior to the adjustment, you have the same kind of allocations we saw 2 slides before, right? You have each fund getting $4,000 of circuit breaker loss, and then these two funds each receiving $2,000 circuit breaker loss. Since that exempt fund cannot receive that $2,000 of circuit breaker loss, this is why we need to do the adjustment to increase the rate and to adjust it out. So what ends up happening here is we know that this fund needs to receive $50,000 in order to receive that full 0.25 share of the $500,000. So what ends up when you do the math, when that 0.25 for the $50,000 to be allocated to that collection of share, what we end up doing is we increase the proportional share. So you'll see the total certified rate started off as 2.51, when now, or 2.50, where we adjusted up to make the current, the adjusted rate 0.26 for the total rate 2.51. So that just says that that exempt fund gets a larger share of the net collections. So they still receive the same amount that they would have received if circuit breaker loss would have never occurred for all the other funds. And then all the other funds receive a greater share of, or the same share that they would have received of the circuit breaker loss. So what that leads me into, as I kind of try to get, or as I'm going to move into the next segment, as I attempt to explain how the circuit breaker adjusted rates work and why they exist. This year, we have a new process that a lot of people have probably received different memos and have heard about, where your circuit breaker adjusted rates are coming out of gateway, and then we have the adjustment. So I want to kind of walk everyone through the process and how that section works. So I'm going to leave the slides for just a few minutes, and I'm going to go to Gateway, see if I can get there and this works. Oh, we are not connected to the internet. Should have tested that before I started. All right, let's try that again. I will not do that. See if I can remember my password. Hey, it worked. So if we go back to last year when everyone got circuit breaker adjusted rates, after the abstract, we would send you that Excel spreadsheet, or was it a PDF? We would send you that Excel spreadsheet with the adjusted rates for all of your different taxing districts and funds. This year, instead of sending you just that sheet and having you either enter it or upload it directly to your system, we set up Gateway Abstract to have the function of being able to create or calculate your circuit breaker adjusted rates within Gateway. In order to obtain those rates, you just need to log into Gateway, go to Abstract, and I'm going to be different because I feel like we always pick on Adams County, so I'm going to go all the way to the bottom, and we're going to use Whitley County. But you have to log in and go to your Gateway home screen. From here, if you scroll down under the abstract sections, there's the circuit breaker adjusted rates section. You just need to go to circuit breaker adjusted rates. From the circuit breaker adjusted rates, you should see this screen. This screen is the calculation of your certified rates, and it has some information I'll go over in a few minutes, and then includes all the way on the right that is not scrolling over to is your circuit breaker adjusted rate, which you see right here. In order to export this file outside of Gateway, you just need to click on the export to text file. If you click the export, and give it a few minutes to run, it comes up with a save as option. We can save it to your desktop or whichever file you want to save it to, and then this file needs to be uploaded to your tax and billing system. Your tax and billing vendors will be able to help you on how to do that. I would just recommend getting a hold of them. So this leads to the next step, which occurred this year, was that we, due to the way the circuit breaker credits or adjusted rates are calculated within Gateway, there are certain rounding differences and variances that are occurring with different funds. In the most parts, it's a 0.001 difference up or down, positive or negative. That is going to need to be corrected via a manual adjustment. The issue that ends up happening if those adjustments are not made, you can have certain units where there are no exempt funds, kind of as we were talking before, where if there's no exempt funds, your taxing district, your certified total amount, and your circuit breaker adjusted total amount, those rates should agree. But because of those rounding differences, the amounts are not agreeing. It's off by either 0.001, 0.002 in some circumstances. And what that could end up doing if this adjustment isn't made, it could create a situation where the proportional share for a unit is increased or decreased. While the amount would be minimal, the point is this is we feel when it comes to distribution, there is no materiality. The distribution needs to occur as precise and exact as possible. So kind of back up just 1 second, one more time. You export the file, you upload this file to your tax and billing system. Once you're done doing that, you just need to go out onto our AOSFTP site and pull the circuit breaker adjustment worksheet off our AOSFTP site. And you can do that by going to aosftp.auditor.in.gov, which would take you to the login site that you see here. If you do not have a login for this site, you can reach out to localgovernment@auditor.in.gov, and we'll get you a login set up for that email address. One thing to note is each email address can only have one login, so if you have multiple people, it would be best to use the different email addresses for each person. So I'll just go ahead and log in. Nope. It does not like me. There we go. Figured it out. It's saved on my desktop, so I never remember what it is. I did not. So when we're here, so I see every county. So when you log in, you're only going to see your specific county here on this screen. But you just need to go to your county. I'm going to pick on Adams now. And just double click on your county. And this would take you to the screen where you have the different folders for the different types of projects that we would use this AFTP or FTP site for. Here you just need to go to settlements and then from settlements. The from settlements folder just means that's documents coming from our office being sent to your office. The to settlements folder means that's documents from your office coming to our office. And you just need to click on the from settlements folder, and if you scroll down, or it's the first one here, it just says 01 Adams CB adjustment. Your file will just say whatever county number you are, your county CB adjustment. So once you click here and you download the file, your file should look like what you see here. So what you see here is this is your circuit breaker adjustments file. So what this is, after the gateway calculated the circuit breaker rates for each of the counties, we went back and we did a separate individual separate calculation outside the gateway to calculate and look at where these small adjustments were occurring to find out which funds and units were going to have the incorrect proportional share. So for this county that I just made up, you have two districts, taxing district 1 and 10 for Washington and Center Township that had two funds, one for the county, one for the school corporation that are going to need adjustments. So if you see here for the county, it's county fund 0101, which is the general fund. It needs to be adjusted up by 0.001 to have your final rate of 0.4508. That was for taxing district 001. For 010, you see the same thing if you come to Q. Row Q, the final rate just needs to be decreased by the 0.001 to have a fund rate of 0.5390. So kind of to walk through that again. For the circuit breaker adjusted rates, the rates needs to come from a text file that's generated from Gateway. In order to get that file, you need to log into Gateway and go to the circuit breaker adjusted rates section of Gateway. Export the file and save it to your system, and then it just needs to be uploaded into your tax and billing system. Once you upload the file to the tax and billing system, there will just need to be the manual adjustments that just need to be made to your circuit breaker rate adjustments. One thing I also just wanted to point out is there are some counties that do not need adjustments. If you look at your file and you see something that says the county circuit breaker adjustments file does not contain any rounding differences, no adjustments is needed. That means no adjustments need, like it says, need to be made after the upload. So once you've uploaded the text file to your system, you're good to go, and no other adjustments need to be made. Just one other item I wanted to touch on for this is I know one of the tax and billing vendors has asked people to upload their adjusted rates. So after you upload the text file, make the adjustments, upload a file to the FTP site so AOS can review it, which is perfectly okay. We're very happy to make a review prior to reviewing your settlement. Gives you the opportunity before you start your settlement to make sure that everything is kind of in line. It's not required. No one has to do that, so it's up to you if you would like to do that. But if you would like to have AOS review your rates before you start settlement, after you uploaded, made the adjustments, you can just upload that the file or a PDF, an Excel file of your distribution rates, and we'll take a look and just make sure that we agree with what we see, and we should be back, be able to turn that around probably 24 to 48 hours at the most. That is a good way of making sure before you run your settlement that there were no errors either on your manual input part, or it gives us the opportunity just to take a double check to make sure that everything we told you to make was right as well. But either way, we will still review it when we review our settlement. That's why it's not required. It's just an option that people have if you would like to have that looked at before you start your settlement. So that is everything I have on circuit breaker, which is a lot. Oh, actually, I have two more things. I lied. No, that is just this year. The goal is for next year. Yeah, 100th of a penny, yes. The goal is to have this be a one-year thing. The plan was not to have to do that this year. It was just once Gateway started calculating rates, we realized that this rounding issue was going to be there, and this was the best way to have the correct rates for distribution and being able to ensure that settlement can occur on time. Next year, the goal will be you upload the file, you're done. That second step will not need to occur. The other thing I just wanted to walk through as well is I just wanted to go back to Gateway and just kind of go through two screens that are created for abstract reports. See, Lori, I told you I didn't steal your. So if we go back down, we're going to do Bartholomew. If we go back down, you'll see here that there's two separate circuit breaker sections that or reports that are calculated in Gateway. The first report that's calculating Gateway is called the Circuit Breaker Report. The Circuit Breaker Report is a report that breaks out by taxing unit the circuit breaker loss that's absorbed by each taxing unit. So one thing to remember, it's not by district, it's by unit. And when you go to each unit, it's going to show each fund. So if you look on this report, it shows for each unit, for example, looking at the county, here's a listing of the county and all the different funds. This is the total levy prior to any circuit breaker loss, and then it calculates the over 65 circuit breaker credit that's allocated to this fund, as well as the 1%, 2%, and 3% losses to come to a total circuit breaker loss, and it comes to the post-circuit breaker levy amount. This is the amount that I think that can represent what that unit would receive on a given year, assuming 100% collections, because it nets out your circuit breaker loss. In order to export this information, you can just click on the little Excel guy right here. Any place in Gateway Abstract, if you see the Excel, you can export that information to an Excel document. The other report, we touched on it briefly, but I wanted to go into it a little bit, is the circuit breaker adjusted rates. We talked about exporting that to a text file, but you can also export this information to an Excel file. So if you export to an Excel file, what it ends up looking like, I can find my drive, is you get an Excel file, an output file, that kind of looks like this. This Excel output file is really great because it allows you to filter the information and sort it to see anything you need to see. A couple main points I want to point out here is that it breaks everything out by fund type or unit type here. You have your unit code and your unit name. And then you have your fund type, your fund code, your fund name, and then you have your taxing district. So here's your taxing district number and taxing district name. Then you have your certified tax rates. At the end, here's your circuit breaker adjusted rate. And here in rows K through M is where it tells you some various information about the fund. I'm sorry, it's J through M. If you see a yes in any of those files or columns or a Y, that just tells you whether or not the fund is exempt, protected, if there's a referendum for that fund, or if the fund includes TIF-AV. So this is a good way of checking if you're not sure, if you want to reconcile back somewhere of whether or not these funds have, if they're exempt or protected. Using this report's a good way to go back to it. As well as if you want to reconcile back if you upload to Gateway or you upload to your tax and billing system from Gateway, this is the best report to use to tie back, okay, I have this system generated report from my tax and billing system, but does this agree with what Gateway said it should have done? The best way I think to do that would be if you click here on this filter section, you can filter option in Excel, you can get there by going to the data ribbon and clicking filter. You can just go to the different taxing districts and use the drop down that's created from the filter section. Just real quick too, before you do the filter, you need to highlight each of the columns in row 1 and click filter. But it allows you to filter out the different taxing districts. So for example, I can uncheck all of these and hit taxing district 1. It would show me, okay, taxing district 1, here's all the units and the funds that are in taxing district 1, and here's what the adjusted circuit breaker rate is. So then you can check and see if that agrees back to what this report was created in your tax and billing system. One thing to remember is that the information you pull out of Gateway does not include those 0.001 rounding manual adjustments. So if you do this prior to entering the manual adjustments, the amounts will agree. But if you do it after you do your manual adjustments, you will have those minor changes. You can also, another way you could filter it that you could do, if you want to see all units at the same time, you could also do a sort function. Hit the sort by district name, A to Z, and then it will sort everything by the district name. So that is circuit breaker adjusted reports. How am I doing on time? All right, now back to presentation. If I can not open things. All right, now easier stuff to talk about. We talked about this. Oh, the other thing is just, I think it was a couple days ago, I sent out an email to everyone for a Gateway Abstract Survey. AOS and the DLGF, would like to receive feedback, positive, negative, from everyone who interfaced and worked with Gateway Abstract so we can get your opinions, thoughts, what went well, what went wrong. I know no one's going to hold back. People will let me know. And so we can work on improving it and making it work to the level that it needs to work for everybody. We just asked for everyone to complete the survey by Friday, June 7th. So we can get as many responses back as possible. As we get close to June 7th, you'll probably, if you haven't, we'll probably be sending follow-up emails just to remind people that to complete the survey. I'm going to go out of order for just 1 second, and I want to talk about the county highway engineer subsidy. This, if you printed the slides online, this slide is not in there. It will be uploaded. I don't think it's in there, right? Nope. Because I added it late. I realized after the fact, after they got posted, I didn't include this slide. But it will be online within the next couple days, I believe. It will be online, correct? Yes, it will be online. But this is something that came out of this session. I thought you were saying something. that came out of this session with House Enrolled Act 1025 for the county highway engineering subsidy. Two changes occurred. The first change is right now, if you currently receive it, and this year as well, you're going to receive $20,000 if you certify a highway engineer. Starting in calendar year 2020, that amount's going to increase to $40,000. So it's going to double. The other change is currently in current code, if you are a neighboring county, say Greene and Davies County right next to each other, they decide that they want to use the same engineer. Before, that $20,000 had to be split between the two counties. Now, both counties will receive $40,000. And again, that will start in 2020. So if you certified an engineer for 2019, you're going to receive the $20,000. But starting in 2020, that goes up to $40,000. So now let's go to June settlement. So as I started my presentation by saying this is the easy part because there were no major changes for 2019. As in prior years, AOS will continue to use the FTP site for circulating documents. That will go back to, as we discussed with when we were talking about circuit breaker items, the documents are going to be have already been uploaded to the From Settlement folder. When you can go in there, download the files, then when you complete it, you can upload them back to the To Settlements folder. I think it's important, especially for newer auditors, to read the settlements manual prior to working and filling out your settlement forms. That was included in the files that were uploaded to the From Settlement folder. You can also see the manual by going on on the AOS website. Here is the address for it. It just contains instructions and tips while completing your settlement. The settlement review process, again, there's no major changes to the settlement review process. We highly recommend prior to completing and submitting your review to go over the settlement checklist. The settlement checklist is just a checklist that takes you through and just making sure your reports reconcile and make sure all the items are included with your settlement. It's just an easy way to make sure all the low-hanging fruit's been checked off and that there's not a number from the 105 and the 49 TC that's supposed to tie that doesn't tie. So it allows you just a quick checklist you can go through to make sure all your numbers tie. Once you submit the forms using the AOS FTP site, Crow again is going to conduct their review. They'll go through the same process that they looked at last year. They're going to check and make sure that any major change, if there are any large changes and variances from the prior year, you receive the number that says, hey, why did this change or why did that change? But then once they finish their review, they'll send it to me where Janie and I will do our final review at the AOS level. And then if there are no other changes needed or questions, that's when AOS will send you an email just granting pre-approval of your settlement. Once you receive the pre-approval from the settlement, that's when you have the okay from the state to go ahead and you can distribute all funds. So you can send all the property tax dollars to all the local units. However, in order to receive the final approval, we just need to have the e-signature uploaded to the e-signature document uploaded to the To Settlement folder. That's the file that I'll send you once you get your pre-approval, and the state just needs to receive all the settlement dollars that are sent to the state. So think of the excise taxes, the state and welfare, and court fees and so forth. Here's a slide that just goes over the AOS FTP site. I feel like we already did that, but again, it's just important to recognize that the From Settlements folder, that's where we will upload the files to get to the auditors, and then the To Settlements folders is where the folder that should be used to submit the file. And again, if you need to have a username created, you can go ahead and just send an email to the local government at auditor.in.gov and just ask for this email address to have a username. That's also who you can contact if you forget your password. If you, like me, where they're all saved and you get a new computer and you can't remember what they were. Been through that. How are we doing on time? 2:41. So the last kind of leg of the presentation, I just wanted to do a quick walkthrough of the different forms. I think it's important to do this just because we do have 20-some new auditors, and many of you may have never seen a settlement form before. I'm not going to get into the details on the really major details on all the forms, but I want to at least just explain what each form is and why you fill it out. Before I do that, I think the other thing that's important is to look at the checklist that I was just talking about. Oh, okay. I thought something was wrong. So here is a unfilled out version of the balancing checklist that I was referring to. And this is why I was saying the balancing checklist is so important. So for example, if we look at the section here where it talks about the settlement form, section A, it gives you the different lines of the Form 105 and how it should tie back to the other reports and forms that are used as part of your settlement. Because if you think of your settlement, it's 7 interlinking forms that all contain different pieces of data, but it should all kind of tell the same story and interlock and have the same information. So for example, if we look at the Form 105 in the line 2 for property tax, that line should agree to the same total that you have on column 1, the 49 TC, and vice versa for all the different other lines that are reported here. This is making sure to go through this settlement checklist. I can't express enough how important it is just to go through, make sure all your lines balance to help speed up the review process. This would just help us by not having to go back and forth. Hey, these lines didn't agree, or you're reporting 2 different numbers here and here. Which one's the right one? This just helps kind of expedite that whole process. All right, down to 2 minutes. I will do my best not to go over. So here we go. So as I was saying, there's 7 main forms. You have your Form 17 TC. That's your form that you're going to use for refunds. The excise tax allocation worksheet. This is a form that AOS created to help auditors on calculating the allocation of the excise tax. Then the excise tax reconciliation worksheet. That's a worksheet that's used to help reconcile between the auditor's cash book and the county treasurer's cash book. The 49 TC, that's a form that's used to reconcile the certified amount from the treasurer to the amount to be distributed by the county auditor. The 102 is a taxing district level of the total apportionments to happen in each taxing district. And the 105 settlement sheet, that's kind of an overall summary for all of the counties. The 105 should always equal all of the 102s combined in total. The 2 forms look the same. It's just the 105s, the combined total of all the 102s. And the quietus worksheet is a reconciliation worksheet help to use to reconcile the different quietuses and any differences between cash books of the auditor and treasurer. So here I go a little bit more detail about some of the different settlement forms. So here in the County 17 TC, it's really a workbook that's made up of 2 different pieces. You have one piece or one tab that's your county summary tab. Here's where it calculates the summary total by taxing district for the refund tax to taxpayers, property tax relief amounts, and total refund amounts. And it also has a taxing district level data where it looks at the individual taxing districts and all the refunds by different taxing districts. This form's generally only required and only filled out in December, but I just wanted to include it. Here's some places where it should reconcile. These are just pulled directly from your settlement checklist, so you can also see that there. We kind of touched base on that. The excise tax allocation worksheet. So the excise tax allocation worksheet is a worksheet that has a drop down where you can drop down and select your county. Once you select your county, it will automatically enter all the taxing districts in your county. From there, if you see the column here where it says total excise, that's where you enter by taxing district the excise tax that was collected for each taxing district. From there, using the sweat allocation factor, which is factors set by statute, it will then calculate how that excise amount should be distributed amongst different units and calculate the amount that needs to come back to the state. You also have the excise tax reconciliation worksheet. That's just, as I stated earlier, it's a 10-step reconciliation of the treasurer's and the auditor's cash books. Here's just some additional tips where I just put in the slideshow where the 2 forms should reconcile to. Next, the 49 TC. The 49 TCs, the county treasurer's certificate of tax collection, is completed by both county auditors and the county treasurers. The purpose of the form is for the county treasurers to calculate and report the certified tax collections for the county. They do that in columns 1 through 4 and column 13, and this is where the county auditor is going to calculate and report taxes to be apportioned and distributed. In theory, those amounts should agree, but there can be differences when instances when there are differences, and that's when they're reconciled using the Quietus worksheets. The 49 TC also is used to calculate settlement of property tax relief. So here's a kind of a screenshot of the county treasurer of the columns that they're going to fill out. You see the certified when calculating the certified tax collection. And then the other section that the county treasurer fills out is the other collections that occurred. So that's going to be all the miscellaneous fees that can include anything from demand fees, tax sale fees, stormwater fees. The county auditor is going to fill out columns 5 through 12. These are amounts, as I say, they should reconcile, but if they do not, differences happen throughout the years. That's what the Quietus worksheet uses to reconcile a Quietus that needs to go to a certain fund or a difference that may have occurred to reconcile that difference. The county form 102, during the months of June and July, or during the June settlement period, you fill out section A. During the December settlement period, section A1 is filled out. This is the form that is used, filled out for each individual taxing district. And here the purpose is you're calculating the amount for each individual taxing district, the amount that's available to be apportioned and to be sent out. Then it also has a section B, and in the section B is where it calculates the apportionment by fund. So if you think of each taxing district, or for Form 102, it's a Excel spreadsheet that has individual tabs for each taxing district. Section A1 calculates the total that's going to be distributed out of that taxing district. Then Section B of that form calculates the distribution to each fund. Then you have the Form 105. The Form 105 operates as a summary of the amounts that were reported in 102. So if you would take all those Form 102s for the 10 or 20 taxing districts in your county, add each line together, you will then come to the amount that's reported on the 105. The 105 as well in June, for the June settlement, you're only fill out Section A. Then in December settlement, you fill out Section A1. It also has, just like the 102, it has a Section B, which goes to the apportionment by fund. And again here, it's going to be the total county fund. So it's going to take all the taxing districts and add it up. And then when it has the civil, let's say the schools, it's going to be the total for all the schools. And then finally, there is the Quietus worksheet. The Quietus worksheet contains 5 different tabs. It has a summary tab, a property tax tab, excise tax tags, additional property tax Quietus tab, treasurer's tax tab, and the additional tax. The property tax and the excise tax, this is just a summary to reconcile out advances and record fees out of your distribution. So you're going to start for each fund. It's going to start with the gross property tax amount, and then it's going to back out the property tax advances and the exam of record fees, and then to come to the net funds available for distribution. Does the same thing for excise tax. Then you have the Quietus, the additional property tax sheet, which represents it's the property taxes collected by the treasurer, and it's just the funds that will need to be allocated to a separate fund via Quietus. Then you have on the treasurer's property tax tab, it's used for reconciling the treasurer's cash book to the amounts to be distributed by the county auditor. So if you think it's going to start with the property tax certified by the county treasurer, and then it's going to reconcile the differences, and then it should come down equal to the total to be distributed by the auditor, and that difference should always equal 0. And then you just have the additional Quietus worksheet, which represents fees collected by the treasurer's office that will be allocated to a separate fund. And that is everything I have. Only went 6 minutes over, so not too bad. Questions, which I'm sure there's tons. Okay. We will be here. Also, we will be here. We will be out just outside this door. If anyone has any questions, if you want to come to us individually, Jenny and I will both be there, and we will do our best to answer any questions that you have. We'll be here all day today and all day tomorrow as well. Thank you.